So today was a bust overall. I took two trades to the downside based off a weekly resistance level. One to the buy side off the same weekly resistance level. All of them went wrong. The dollar basically had no direction today. Basically on the start of the day, the dollar was at a level, and then at the end of the day, it ended at the same level, even though the market began to rally at around 11 o'clock. And by that time, I was done trading on the day because I had the three losses, and I just decided, let me not try to chase the market anymore. Let me just leave it and come back to it the other day. So I'm definitely going to do that, or I definitely did that today. But I'll show you the three trades that I took today and also something else important that happened today. Right, so my first trade was at 9:38, right? So I wanted to kind of look and see what the market was doing before I entered. So at 9:38, you could see the dollar reversing. Whenever the dollar reverses, I'm looking for a sell on the QQQ. So I'm looking for the QQQ to go down, right? So at 9:35, I entered to the sell side, and I'll depict it right here. So I entered to the sell side. You can see a red candle here. So I was right on that. However, the next following candles basically knocked me out at around 9:49. So I entered to the sell side at 305.90. So that's as the QQQ kind of played with the resistance level here. And I use purple for my weekly resistance level. So I'm thinking that would have been a strong resistance level, and the market wouldn't have been able to break above that level. However, it still broke above it, and this push, like while I was watching it today, it's almost like the broker could see my trade and it could just push it up right to there, knock me out, and then push the market back down. But even then, if I had been in the trade longer, I probably still wouldn't have taken the trade because it just didn't reach my profit target. It would have been like something small that I wouldn't see it as worth my risk to reward to just take it at that point. So I got hit out at 306.50. So as you can see, this was above the resistance level, and this is where I got hit out at 306.50, right? So I entered here to the sell side. I got hit out at this level, and I tried to keep my stop a bit close today because I just didn't like how the market was trading. I was right on that one, but the second one, where I could see the market going my direction, it's just that it came down, hit my stop loss before continuing the rally. And that's what happens sometimes. So this was the first trade at 9:38. And then at 9:49, I got hit out at this level at 306.50 for a total loss of 13.50. Okay, so the second trade, and let me show you what the dollar was doing around then. So the dollar at 9:35, you could see the dollar kind of pushing up here. So when the dollar starts to push up, that's when you can kind of look for sells. But as soon as you hit around 9:55, 10 o'clock, that's when the dollar kind of found a top. Whenever the dollar finds a top and starts to break back down, that's when you have bullish movement. That bullish movement is just exactly what hit me out of the trade. So the second trade, when I saw the dollar form the top, I entered to the buy side on the QQQ. So I entered to the buy side on the 950 candle at 306.56. So this is where like sometimes you can feel like the market is just watching you, and it's just gonna do exactly the opposite of what you expect it to do. So when I entered to the buy side at 950, at 953, that was just a huge push down, and that came right to my stop loss, which was at 305. So it came right down and pushed me out. Same candle that I entered on at 305 for a total loss of 32.70. So this was the second trade, and the 950 candle on the dollar was still a green candle. So it's definitely gonna be bearish on the QQQ. So that would have been the second trade, the losing trade, because I entered to the buy side. For the rest of the day, the buy trade would have been the best trade for the day. But having such a close stop loss is what really puts you at risk. And even then, if I had a lower stop loss, I probably would have gotten hit out at 1010 or the 1005 candles, because the QQQ came down to like 304.20. And at that point, you would have taken a loss of, say, if you're trading 20 shares, you'd have taken a loss of $60 to possibly make another 60 on the upside. But that's like taking too much risk to just make a small amount of profit. So if you're trading like 200 shares, you'd have risk, say what, $600 to make $600. That puts a bit too much of your capital at risk. So having a tight stop loss, you might be out of the trade early, but say the trade continues to go against you, it would be better, right? So at around 10:08, so the 10:05 candle is when I entered to the sell side again, because I could see the market kind of pushing up here. Let me see. 10:08. So at 10:05, I'm seeing the market kind of find a level of support, or at least that's what I thought. So I thought it found some level of support and would have continued up, because from the start of the market, it's been like a slow grind up on the dollar. So I was looking for the dollar to continue to grind up. If the dollar continued to grind up, I'm sure we would have seen more sell pressure on the QQQ. But we didn't have that. Today was just a weird day, to be honest, because the trend didn't even start until around 11:25. And interesting, that's when, looking at it, seems like the best time would have been to enter when it kind of broke above this resistance level, opened above this resistance level. However, it opened above this resistance level at 950, but it closed interesting, it closed below the resistance level. So that could have made the trade more invalid. So probably it would have been best for me to open this trade when it kind of open and close above the resistance level, and just look for it to continue. Because if you entered here, right, you could have had a stop loss just directly below here, and for the rest of the day you wouldn't have entered your stop loss at all. You could have just rode it right up until the top at around 210, or even 345, 350. You could have just held the trade, right? So let me show you where I entered at 10 on the 10:05 candle. So this is the 10:05 candle, and I entered to the sell side at 304.74, 304.74, and then I got stopped out as the market started to go against me on the 10:15 candle. So 10:15 candle is where I got hit out at 305.50. So that's when it really started to go against me. However, I didn't think it would have went against me like that, but that's why I have the stop loss, to not have it just wipe out my entire account, right? So 305.50, 305.50, come on, right there. Okay, so I entered to the sell side here on the QQQ, and that was the final trade for the day. So I entered to the sell side here on the QQQ. This would have been the perfect dip buy, yes, but it didn't look like that on the dollar to me, as in how the candles were forming during the day. So this would have been a good buy to the upside. I entered to the sell side thinking it would have continued down, because it even passed the lowest point on the day. So this was the open, and this kind of started to push down as the lowest point of the day. So I was expecting more of a continuation, but it definitely reversed at around 10:10 and started to go against me. But even then, the dollar didn't really show that bearish momentum, something that I could have said that's why the market is moving like that. It just seemed kind of out of whack, And the market was just playing. It seemed like the QQQ was moving individually today outside of the dollar. And that's what happens. But I'm just accepting that and we'll just trade tomorrow with the same strategy and just see how that goes. So, what happened today, which I find very important and it might be news that's ignored. So, you can see this article on USA Today. So, the debt limit forecast says US could be in default by summer. Here's how that could impact you. So, basically, the US might default on its debt. So, everything that it owes, it can't pay it back. The US is in a complete deficit. And the CBO is the person who reported it today, the Congressional Budget Office. And then we have a definition of the CBO here. So the CBO is a strictly non-partisan, so it doesn't pick any sides. It conducts objective and impartial analysis. So it's looking at the facts, right? It's just looking at the complete facts, not picking any sides, not trying to steer to any side, and just telling you what's really happening. So they say that the US might default on its debt. And then it seems like the president wants to actually raise the debt limit or completely get rid of the debt limit, and that will have, I'm not sure what kind of effects that will have on the economy, but that's a way for them to kind of take on more debt. So it's basically like you have a credit card and you're at your debt limit, and then they just say, you just tell them that you're not going to pay it. And the credit card company says, you don't have to pay it, you can owe us more money. Can you imagine that? So the US hits its debt ceiling of 31.4 trillion on Thursday, raising economic concerns about what happens if lawmakers can't reach a deal to pay US government's debts, right? The Treasury Department has begun using a series of extraordinary measures to avoid a government default on its debt, which buys the US about 6 months to either raise the debt ceiling or come up with a creative way out. So I actually went and plugged in the question to an AI to see what it's saying. So I said, what happens if the US forfeits on their debt, right? So credit defaults. In the event the United States defaults on its debt, it is likely that the value of the US dollar will decline significantly. This would likely have a negative impact on global markets as many countries have extensive investments in US securities. It is also possible that the United States could suffer from increased inflation, higher interest rates, and a weaker economy. It's almost sounding like the US defaulting on its debt equals stagflation, right? So I typed in this as well. So what would be a way for the US to recover from that? So what would be a way for the US to recover from defaulting on its debt? So the United States could recover from a debt default by implementing austerity measures. So austerity measures is like when you tighten up your belt, you are not spending much loosely anymore. You're like, how can you say, when you're implementing austerity measures even as an individual, that's when you start to cut back on your lifestyle, you start to save, you're not spending any loosely, you're probably just trying to make more money than you spend at this time, right? So by implementing austerity measures, the US would do things such as spending cuts and tax increases. So they would try to get more money from the public and then to stop spending that money on like frivolous things or things that don't seem to pay back themselves, right? So additionally, the Federal Reserve, and these, it's almost like these people control the world, right? So the Federal Reserve would raise interest rates even more in order to make borrowing more costly And finally, the Congress and the president could work together to pass legislation that would reduce the federal budget deficit and put the United States on a path towards fiscal sustainability. So I asked, what would a federal budget deficit look like to the regular person, and how would that affect their lifestyle? So this is saying that a federal budget deficit, if it's too large, it can lead to increased inflation and higher interest rates. For the average person, this can mean a lower standard of living. So, across the board, this might lead to a lower standard of living for just about everyone in America, make difficulty in trying to make ends meet, and it also can mean difficulty overall for everyone to get credits, to get loans, because if you think about it, if you have high interest rates, right, for you to make say a mortgage payment or a car payment, if you're taking out a loan, the cost of taking that loan becomes extremely more expensive. So to buy a house, say your mortgage payment would be $10,000 a month. Most of your payments would just be going to interest. You're not even building equity into the home or the car or paying off the loan as yet. You're just paying off the interest at this point. So if you're not able to even sustain some of the debt, you will just end up going bankrupt or defaulting on some of your debt, and the bank will just take back the asset, or just, yeah, the bank would take the asset and probably sell it back cheaper. So this is saying, in short, a federal budget deficit can negatively impact the lives of everyday Americans. So that's definitely what might happen. Let me see what else they say on time.com. So it said, whenever tax revenue doesn't fully cover government programs such as defense spending, social programs, and government salaries, which it has every year since 2001, the government must borrow money, but it's restricted by a set limitation on how much debt the US can incur. Another option is for the US to even stop some of its social programs, like, say, it stops something like pensions. It stops something like, what's the other thing? It stops anything that the government can probably peel back on paying pensions, a lot of medical support, a lot of help for people who aren't doing well, like you're homeless or you're an addict or something. So basically, the US can pull back a lot of social programs in an effort to just cover the deficit. So if this is to happen and the debt ceiling does not get raised, or the US ends up defaulting on its debt, there's a high possibility that a lot of the government programs might get cancelled. The government programs, the defense spending, social programs, people that work in the government, their salaries, government contracts, government building, a lot of things like that can get pushed back so that the government can just cover the debt, and then we can have like a fresh start. But that's basically something important that happened today. I'm not sure the correlation between the market going up and the US raising the debt ceiling, because it seems like we would have a weaker dollar at that point. That might have the market go up in the short run, but because other countries might see the US defaulting on its debt, they might pull out its investments of anything that's denominated in United States dollars. So we might see a huge sell off in equities, huge sell off in bonds, and then a huge sell off in just the US currency overall, because people would just lose faith in the US dollar, right? But let's see what happens tomorrow. Tomorrow is Thursday, and today was a Wednesday. You should have reminded me. I should have known. You know, I don't like trading on Wednesdays, and it's definitely something I might just cut out fully because Wednesdays just seem like a indecision day, and I don't like indecision days in the market. Definitely, today was a Wednesday type of day. I totally forgot that today was a Wednesday. All right, but that's all for today. I'll see you in tomorrow's video. Hope this video can provide you some value. Even if you see me taking a lot of losses, you can see how the market trades off certain levels, especially my support and resistance levels. The market tends to respect it even slightly. My support and resistance ranges. So even if it's not exact, you can see that the market definitely reacts to these levels. And it's not like the brokers or the market makers can see these levels. They're working with their levels themselves, but it just turns out that all of us probably have the same levels, right? All in all, it was a good day, and I'll see you in tomorrow's video, all right? Bye bye.